We are back with the Robinhood Options Challenge. This is episode 6. If you want to watch the last episode, you can click a card in the top right. But getting right into it, going into episode 6, we had profited on 5 of the 6 total trades that we've done. We have total booked gains of $66, and our option money was sitting at $566. Now, it's been a minute since I've traded options. I took a little bit of a break, and I'm still kind of in that break period as I don't feel too comfortable investing in options at the moment, but I'm gonna try to find a couple plays at least for the month of June. But anyways, what we had going into episode 6, we had 2 pending trades. We had a call credit spread on Uber that expired on May 1st, and we also had a put credit spread on Intel that was expiring on May 22nd. So starting off first with Uber, it was a call credit spread that we opened on April 15th. We went ahead and we sold a call at the $30 strike. We went ahead and received $25 in premium, and we had a max loss of $75 on this trade. So taking a look at Uber throughout the duration of the hold for the position, remember that we had a ceiling at $30 for Uber. If Uber went above $30, we would be losing on the trade, and if it stayed below $30, we would be winning on the trade as long as it stays under 30 before the expiration. And we bought into this position on April 15th, which is at the far left of the graph. And at the beginning, I'd say the first week, it was doing very well, the position. But then on April 21st, Uber started picking up momentum, and it seemed like every hour that passed by, Uber was on the way up. And that momentum carried over to all the way towards April 29th when it finally surpassed the $30 ceiling, and it stayed above that ceiling for basically a full 2 days. And keep in mind, my expiration on this play was May 1st. But I stuck with it. I wasn't worried or concerned about losing my investment on this play since it was a small amount. I was comfortable losing the amount. So I went ahead and I continued to hold. And then on the day of expiration, Uber starts to decline, and I was able to sell off the position for a gain just by holding to the position and not panicking before. Now, I could have held it till expiration and gained the full premium, but I decided to play it safe, and I went ahead and I closed it by paying $14 on May 1st in the morning. So just to recap, we collected $25 in premium when we opened the spread, and we paid $14 to close, which resulted in an $11 gain on this Uber call credit spread, which was way more than what I expected because I was expecting to take the full max loss on this trade. But by holding till expiration, we were able to close for a profit. So moving on, we did have a put credit spread on Intel that was expiring on May 22nd. This was a put credit spread, so we went ahead and sold a put at the $54 strike. We went ahead and collected $21 in premium for this trade, and our max loss was $79. Now, taking a look at Intel throughout the holding period of the spread, I opened up the spread at around April 20th, and as you can see, the stock took an absolute dip ever since I opened the position. And keep in mind, this is a put credit spread, so we want the stock to stay above a certain price. In my case, it was the $54 strike. And even though the stock didn't have the best momentum, it was going down pretty much since I purchased the spread and never really went under that $54 strike. And even on the big earnings day, this was kind of an earnings play, which I don't usually do. But on earnings, the stock took a huge dip and never crossed the $54 strike, but it did took a horrible downward move. And I didn't panic, I didn't sell, I didn't buy back the position at a loss. I continued to hold, knowing that the call wasn't actually that bad. I talked about that in the last episode. But the call wasn't that bad. I felt like a lot of people overreacted, which was pretty much true as the stock ended up climbing back up. And I went ahead and closed the position on May 11th. I could have let it go to expiration and collected the full premium, but I figured, hey, I actually made money on the Uber play, and I've collected more than 50% of the premium on Intel. So I went ahead and I closed it on May 11th. We went ahead and paid $6 to close. And to recap, we collected $21 in the beginning. We paid $6 to close, which resulted in a $15 gain. So overall, at the end of episode 6, we went ahead and we closed a put credit spread on Intel, resulting in a $15 gain, as well as the call credit spread on Uber, which we closed for an $11 gain, totaling our gains for this episode of $26 in a time where I honestly thought I was gonna lose pretty much everything on Uber, on the Uber play, and then I would have been down for this episode. But we ended up coming up top just by being patient and sticking to the plan and holding our positions till expiration. So at the end of episode 6, our account totals are now, we've profited on 7 of the 8 total trades that we've done, which is pretty ridiculous if you ask me. We're sitting at $92 in gains for the account, which is absolutely crazy considering that we're only risking no more than $500 for this little options experiment. And so far we have $592 ready to deploy for options. However, I still haven't actually bought any options as of yet. I'm kind of waiting out this market a little bit. I could be buying put credit spreads as the market just seems to go up and up and up without ever looking back to go down, but I'm a little bit hesitant to do that. But if I do find a play that I feel comfortable in doing, I will get back into the options game. So far, I've had a lot of fun. We've turned our $500 into $592 in about 2 months or 1 month. So that's pretty good, but I'm gonna continue to be conservative. I'm not gonna take any plays that I don't feel comfortable doing. And if I can find some good plays, hopefully in the month of June or in the upcoming weeks, I'll take them. If not, I'll just be patient. Anyways, thanks for watching.